How's it going, everyone? Welcome to the 210 weekly trade review. So this week I took 19 trades. I had one earnings time spread. I have 4 swing trades, 2 that I carried from last week. I had 13 day trades, and I have 1 open swing right now, which is not part of the 19. So 19 closed trades and 1 open trade. So this was a pretty good week for me in terms of return and performance. We had kind of a dead week, so let's get into just what happened in the market this week. I'll lay out some of the context, and then we'll get into the trades. So we closed right over here last week. We had this bearish candle here. The intraday price action was kind of janky, and instead of getting a gap down like we typically did, we got a gap up that held half of those gains. We got another gap up. Then we had a drop from the CPI that recovered most of the gap and close above that prior day low. And then we had follow through buying over here with a day of rest right at the all-time high near the holiday. We just generally slightly poked above it. So that's where we are right now. And it was a bullish week. It was a bit of a hammer type of week. And even though there was some dead price action on some of these early days, there was still a chance to get some nice trades going on over here. So let's zoom into this M30 chart. So the price action this week, chop, 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 chop channel, drop, and that drop is a catalyst. And typically when we hit that 50 SMA is when we start to rally, or we kind of shoot down below it. Buyers kind of scoop it up and we rally harder. So I knew that when we got a nice bounce off the 50 SMA, we had a decent chance of moving up higher in that direction. All right. So we're going to start with the earnings time spread because that's the easiest. Then we're going to go to the swings, and then I'll go over to the day trades. So the earnings time spread that I took was on Hood. Took it on Wednesday. I took the 56 calls for a 40-cent debit. And let me check the setup on Hood here. So here's the setup. Times exceeded 15%. Had an IV crush of 85, or an IV difference of 85. The expected move was 13.3%. The average move was 8.5%, and very high option liquidity at 9. It looks like it's 13, so maybe it went up. Now, when I entered the spread, the front IV was 2.1. The back IV was 1.1. So the difference was closer to 1 before I took the spread. And Hood actually exceeded that move just very slightly. So I'm going to actually put up this chart here on the bottom. And I'm going to try to make it not as crazy with the indicators. Should have my lines here. Yeah. So this orange line represents the expected move by the market makers. And it pretty much hit that move, and it was kind of chopping around this level. So let's zoom into that M5 chart. Just see what was going on. So originally, when I took this setup, I was like, all right, I'm going to set an order for a 50% gain. A little aggressive for a Thursday, but certainly possible, especially if it opened flatter over here. And I had a lot of crush to work with. So we opened first candle over here. You can ignore this pink line, which is that AVWAP E. It was set after this candle on the daily chart closed. Nice long green bar. All right, don't like that. We got a little bit of follow through, and I'm also not liking that. But on the 13th, I'm watching for if we get any sort of resistance moving down over here. And then third candle, we get a long red candle that has a huge tail. So as soon as I see this, I'm like, all right, I like this. I'm going to try to see if I can ride this down and see if it can break through this red candle here and start to fill in some of this gap. Now we get a first test down here. We poke through the low of the day. Buyers come back and scoop it up, which is fine. And we get a second test right at VWAP. Another hammer over here, long red bar. I like that. And then we start to trickle down and move down. I think while the market is moving lower, so we're getting a little bit of market tailwind over here. And right when the market hits VWAP and has this little tail, we get a test and just a poke through, but pretty much a double bottom right here. And so at this point, I'm thinking, okay, this is looking pretty nice. I think Hood has a good chance to fill in the gap. I could scratch right here, but I think I have a good chance of writing this down a little bit lower. Now, Hood ends up rallying for most of the day and actually gets above VWAP and have a little buy signal here. So it seems like this support is holding for the time being. And then we get another taller bounce that was much taller than, it was taller and longer than what we've kind of seen before. But the market was also looking pretty strong over here on some news. So when Hood closed, I was maybe down 50% on this. But I was thinking, okay, didn't do what I wanted. It kind of held the gains. So I'm going to see if it can try to crack through early tomorrow, or else I'm going to have to take the loss. So early tomorrow comes, and we get this nice long red candle, little tail, normal kind of opening volatility. So this is the moment of truth, and then boom, 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 boom. Buyers come and scoop it back up. So at this point, Hood is a lost cause. I'm just trying to get a better loss. I don't think I can really scratch it, especially because the time decay is moving against me. So the closer this gets to expiration and the more out of the money I am, it's just going to slowly eat away at any chance of me getting a decent profit here. So we get this tail here, and then I think I actually go long on Hood at 65.40, pretty much right around here. I take a small position just to kind of chip away at the stock because it's kind of a dead miss. And then when I see this little hammer here, I take a small gain. So I took like a 40-cent gain on this on a small position. Nothing crazy, but chipped away at it a little bit, made on the original spread like 5% off of that. So not a huge amount, but we take it. And then I had a good timing because we got this bearish candle, and I'm saying, okay, well, now here's my chance to exit out of the spread for a smaller win. So we get a move down to VWAP, and now the spread, the bid ask is getting kind of annoying. It's like 15 cents, 12 cents in the mid, and then it's getting kind of wide. So I'm not really getting a fill at mid at 12 cents. So I take the loss at 10 cents right over here when it tests VWAP. I think this is a strong move. We're testing the high of the day, and I felt that Hood had a chance to continue up higher. I didn't know what the market was going to do. The market had a chance of kind of bringing it back down, but I also didn't have a lot of time to work with, so I needed to see a move pretty quickly. And Hood did have a little bit of follow through, kind of meandered around a little bit below VWAP. So maybe I could have gotten out for like 12 or 15 cents, but I like my exit overall. In terms of improvements for this trade, maybe I could have scratched out over here when it started to rally up or when it started to get some relative strength. I think that was my clue to maybe get out of the trade. There was also liking out, which I considered, but it just felt too risky because it really skews your risk reward. So I didn't really want to mess with that. I figured let me just take the loss, take it on the chin, and then move on. So that was Hood. Took a loss on that time spread, but it was a good setup. Didn't pan out. Had maybe a chance to scratch it, but this trade management is a little bit difficult, so still trying to learn it, when I should just try to get out of the trade or when I should really push and see if I can get a fill. Let's go to our swings. So the first swing that I will talk about here is Tesla. I took that swing last Friday on the 7th. Let's zoom into this D1 setup. I really like this D1 setup because we had a lot of levels to clear on this Tesla before it was really ready for a bearish D1 reversal sort of play. So after this big run up, we've been kind of trickling down. We're in this bearish channel. And we had earnings, we broke through the 50. We also had this election AVWAP, which I've been putting on my charts that stocks have been reacting to, and it hadn't cleared that level yet. So on the 6th, we broke through that level, and on the 7th, you can see that we came back, we went to test that level, and then we rejected and closed below this low of the day. And this low was also a level on Tesla. So I'm going to put that up over here. I think I've drawn this on my charts. It's acting a little slow. Yeah, there's a couple of these green lines are some other AVWAP. So I think this is from the election. And this blue line is from another pop. Yeah, from earnings. So this is the last earnings candle right here is this blue line. So I was kind of chopping around between these different AV apps, and I wanted it to clear that blue line before I got in, because then I knew I had a good price. So here's the D1 setup on Tesla. Now, the other important thing, and the more important thing, was on SPY. I had to wait until we got some selling from the all-time high. So the whole week, we're rallying. I knew that near the all-time high, I would have a chance to take swing shorts. I just would have to wait. So finally got my chance on the 7th. And when I saw this, I said, okay, market rallied this week. Tesla kind of floundered around and just went lower this week. So as long as the market, even if the market goes flat, this stock is going to drop. And in the next 2 days, that's what happened. Market flat, Tesla drop, and I took profits at the 100 SMA. So let me talk about the setup here. I took the 362.50, 357.50 PDS for 230. And let's look at this M5 chart. So here was the setup. This is the day before, big long move down here, kind of rallying up. We got a tail and then smackdown. It's kind of choppy over here. And when we start to clear this level right here, I have my alert set. We start to poke through this level. So we poke through this level with the long red candle. And then the second candle, I wanted to make sure it held because it was kind of choppy. So I was like, if I enter in here and we get a big bullish candle, not super likely, but I'm just going to give it a candle here, just give myself some extra probability. We got a green candle that tests half of this level, tries to challenge this prior little compression low, and we end with a bearish hammer. Super relatively weak. I'm going to go to the SPY M5 chart as well so we can zoom into this entry. So took this right here at 305, and if I go to the market at 305, market is kind of flat right now, right? It hit the low of the day. It's kind of digesting some of these gains, not doing a whole lot. Tesla has been really leaking lower here, and it did not really respond too much to this market bounce that you can see that we got right here. So as soon as we got some market selling, we got some mechanical moves flushing out some of these dip buyers over here. We got that next leg lower. So this is where I entered Tesla, and we got some nice follow through over here. So I took that PDS that I mentioned earlier, the 362.50, 357 PDS for 230. Now, my plan here was I was expecting a market to gap down, and if it had a big gap down, I would take gains on Tesla because in all likelihood, the market would start rallying after that gap down because that's what it's been doing for the past month. So my plan was big gap down, take gains. If we don't get a big gap down, or if Tesla has a small gap up or a small gap down, I can kind of stick with the position. The PDS works better as I slowly approach the target, and then I hit and I get past my short strike closer to expiration. That's when the profit potential of the PDS really accelerates. So the next day, we get a gap down while the market gaps up, which I really like. Comes in and tests the gap. So I don't like this move. Not a fan. But I want panicking because, look, it's choppy stock, right? It's going to go up and then kind of compress. So it's compressing for a while, and it's digesting these gains, has some relative strength, and then it starts to dip back lower over here. And there's a really nice flush at the end of the day while the market is doing absolutely nothing. Literally absolutely nothing. From 220 onwards, market stops rallying, and then this stock just drops like a rock. Next day, we got another small gap down. Try to fill in the gap. We don't fill in. And then right in here, it's looking like okay. It's kind of choppy. But this is a nice signal candle. If I was day trading Tesla, that's where I would be focused on getting into. Got this nice signal candle here. And the market is rallying kind of at this point. So Tesla's just trying to hold on as long as it can. And as soon as the market stops rallying here, this is actually at 1050. Here's a market at 1050. It actually makes a new high of the day. And this is when Tesla drops and makes new low of the day. We get that nice move down over here. Now, this SMA has moved up because it's been a couple of days, but the SMA was actually over here around 335. And so I had my order out for $4.35, which was right above the SMA. I think it ended up peaking at like 445 or 450. So I got a really nice chunk of the move. And had my order out, and it got filled right here at 11:15. So we had a really nice move around this guy. Took it here, and then rode it all the way down over here. And this maxes out at $5. So my risk reward in terms of holding it was not ideal, considering it was at the SMA. It could bounce. It could take me above that strike price. Not worth the hassle. And that's what it did the next day. We got a pretty nice bounce. Actually ended up peaking above this level here early and then sold off. So I did end up taking nice profits. I would have ended up taking a full profit on the spread, but it's kind of hard to hold these unless it just completely obliterates the price target and then never looks back, which is very rare. So that was Tesla. Next swing short I took on the 7th was Wendy. So here is a setup on Wendy. Pretty bearish D1 chart. Had poked up over here, had a little bounce, and then we got a nice smackdown red candle on this bounce. So I took it at 441. I took shares, so I swung 250 shares short at 441, which was a smallish size. It was maybe like a third size or something. But this doesn't have a high ATR. ATR of like, 30 cents. So doesn't move a whole ton. I was just using the stop over here, 15.19, 15.20 as my stop with some room over here to about $14. And again, I was looking for a gap down, quick get in, get out over here on Wendy. Same setup. And I want to zoom into the M5 chart because that's going to be a little more telling. So here is the action that I saw on Wendy. And I took it at the close right here. Looked good. And then when the SPY gapped up, you can see that this stock was flat. So I like the price action. And then it's just super choppy the whole day. Big bounce, test the low. Another big bounce, test the low. We poke above it. Then we get another tall bounce. So we're just kind of literally doing nothing here. Didn't like it as much, especially when you compare to Tesla when I got some nice follow through. Now it's really choppy. I knew that either we're forming support, we're going to crack down on Wendy's. But I had a very short leash on this because it had earnings this week on the 13th. So I didn't want to be in a position where it started to rally. It's also on buy and to earn. So I had a chance of rallying too. I was playing it pretty cautious. And I didn't want this to rip up against me and have to eat up a fat loss when I didn't really need to. So on the open right here, when the stock isn't doing anything, I ended up scratching it on the open at 441. Right over here, scratched out of it. I thought, you know what? I don't have to waste time trying to trade this kind of garbage. Let me just scratch out of this trade, and I can find better trades and just not have to worry about managing this kind of guy. Now it poked up above over here to 460, came all the way back down to 426, so maybe I could have taken gains near the low of the day. Just not worth the hassle at the end of the day. So that was Wendy. Just trade management, but it's a good example of when it gets kind of janky. You don't have a lot of time. Don't pay yourself in a corner. Just crash out of the trade and move on. Next one I took was Netflix long. And I took this trade right over here on the 12th. So like the setup on Netflix. And here is the setup on SPY. We had tested the 50. We had rallied. Netflix had held up pretty well the last couple of days. Didn't respond too much to that candle. There was some support, especially at around $1,000 and this prior high from this bearish, long bearish candle post earnings. So I like Netflix. Very strong stock and kind of orderly, choppy move. So I took it close to the end of the day at 126 or 1026. So 10,026.45. And I figured that we'd get some follow through buying on the stock the next day. So we got some follow through buying. Netflix also had some follow through buying, and I took gains close to the high of the day, around 1039.50 is where I took gains on the stock. So let's get into some of the planning for this stock and how and when I decided to take some gains. So this was the setup on Netflix, pretty strong for most of the day. And let's look at the SPY setup on that M5 as well. So this is the SPY setup after the CPI drop, was rallying, and it had some decent strength. Netflix was really nice. It's grinding up higher, pulled back here. This is a nice breakout. So ideally here at 1020 would be an excellent entry point. So here's a better entry point, but I took it somewhere over here, close to the end of the day. Now, first candle next day, long green candle. I like that. I want to see if it holds. And we're kind of inching up higher, and we end up digesting the gains, right? It's not really relatively strong, especially when the market is moving up higher. So I was thinking, okay, maybe I should take gains here because it's not strong. But the market was still pretty bullish, so I figured that I should give Netflix some time. Maybe digest some of this long candle and the move from yesterday. So we're holding, and then we start to rally up at the end of the day. This market rally is looking pretty good. And on Netflix, it's looking relatively weak, but a lot of stocks will be relatively weak during this rally because this is a pretty nice move on SPY. And I decided that I would take gains near the high of the day because I wasn't sure if it would break or not. So I took gains right on this candle at 139.50. So pretty close to the high of the day. And it ended up breaking through and actually had some nice follow through into today. Big candle, big bearish engulf. So probably could have ridden it a little bit longer to 1058 because we hadn't seen any signs of the bullish trend stopping. However, I wanted to be prudent because we were approaching the all-time high. I didn't know what would happen if we get a gap up and some bearish candle out to take gains. If we got a flat open like this, we had a chance to maybe grind through the market and try to push up higher. So Netflix, all in all, I think was a pretty good trade. And I like how I like my setup and entry was all pretty good. My trade management was pretty good as well. But I think I should have had more faith in this market move and be willing to at least see the next day. Because even if you look at something like the 7th, I do have time to get out of the trade if we see some sort of like, look, small gap up, wimpy move, and a leg lower. I mean, we had was it ISM maybe? We had some news or something that day. I forgot, but there's not a lot of news this week, so this kind of long candle is unlikely. But I should have some chance to just get out of the move over here. I'll have time to kind of exit because the stock has relative strength and I have some cushion on the D1. I just want to go over to something like this chart. Yeah, where we get a gap up and go near the all-time high. Right now, I'm a lot more cautious. And when I start to see we start to meander around here, that's when I can take gains. And we didn't quite see that. We had a really tiny gap up in a test, and we had a potential to maybe break down over here, but we didn't get that. So even though I closed Netflix something at 11:15, if I'd seen this setup on SPY, and I'm thinking, okay, we have a chance to actually maybe get short here. This is some nice candles. Not a ton of volume, but we'll see if it can pick up. 11:15. Yeah, I mean, that's still almost another $9 on that move that I could have taken out. And that's a much more justifiable exit, in my opinion. Okay, last swing that I took was Shop. So here's the D1 setup on Shop. Kind of a choppy stock, post-earnings, long tail, tested, recovered, another test, digesting those gains, and then we got a breakout above that earnings candle, above that high of around 126, and we get a fresh buy signal on the D1 chart. Nice strength on this guy, and was kind of roaring on the day where Let's go back over here. Yeah, definitely pretty strong when the market was in a bullish trend. So I like Shop. Now, when I took it, it was actually initially a day trade because that's what I sized it for. So we had this big rip up over here, and around this 126 level. Here is that breakout. Here's the high from the earnings scandal. We got the breakout, and I thought, all right, this is a pretty nice move that we see. I am gonna wait for a pullback here, see if I can get a nice entry. So we're chopping around. We get this long candle, and then we're forming some tails over here. We're kind of inching up higher, and on this tail right here is where I enter at 127. So I saved myself about 60 something cents from from this long high candle. So I really like my entry here. Now, this is some strong volume, and then the volume kind of dies out over here, which is normal for a compression. But I like this relative strength at 12 o'clock. While the market has been going down, this stock has been churning higher. So I really like that. Now, ends up losing its relative strength here. We get a breakdown. We needed a flush to VWAP because this move was just a little too dang powerful. Test over here. Test. We're forming some tails here. Buyers are coming in, scooping it up, and then we get some liftoff at the end of the day. So if it was a day trade, I probably would have gotten out, here, scratched out, or even here. But because I realized that, hey, 1, this daily chart is strong. 2, we closed above the breakout level. And then 3, I am sized appropriately where I can take a loss on the daily chart if I need to. I figured that I can just hold shop because the market's looking pretty bullish right now. So I hold shop, and the next day, right, market slightly up, shop has a gap down. Also to check the bid. It's also kind of volatile over here where we poke through this level, and I'm like, all right, we're in a bearish channel. What's going on? Are we in an expanding kind of wedge, which is really weird? So it spends the rest of the day after that move just kind of grinding. So this looks like it was some sort of selling climax here. And that was like a buying climax, selling climax. It's just a little bit choppy. And then we poke through the high, get another little flush out. And then over here, it's near the end of the day. And the market has been pretty dead. And I don't really know if it's going to break out. It looks like a day of rest, and it could break out. We also could get a gap down on Tuesday after the holiday. So in terms of the market moving, there's not a super strong indication in any direction, in my opinion. But I was leaning maybe 60-40 bearish, and that's actually why I took a SPY PDS with a good risk-reward sizing there. But I decided to close shop because I didn't want to have to manage a long and a short. Now, it would be more balanced, and maybe it would make more sense because the market I'm 50-50-ish, 60-40-ish on the market. But it's such a choppy stock that it could rip up. It could not rip up. It broke through. It's looking nice, but I just didn't want to really have to deal with it, to be honest. So I took a win here at 128.50. So it took $1.50 overall. Or sorry, 128.48, which is a pretty nice win. And I'm not going to think twice about it. So that was a nice week of swing trades over here. Let's look at some of the day trades that I took this week. And we're going to start all the way back on SPY 210. Okay, so first day trade. First day trade was Zeta. So here's the setup. As you can see, it broke through that 200 SMA and then had to come back to test it. But I like this stock. Now, it had a really big flush out post earnings. I forgot what happened. I have no idea what happened to it, to be honest. Found support. Big bounce up over here. Came back to test support. Higher low. Compress. Breakthrough. Break through the 50 SMA. Testing that AVWAP E. And then this red line is the earnings. AVWAP again. So we're poking above both of these and the 200 SMA. So it was a nice breakout earlier in the day over here and had a ton of room to that 100 SMA. So I liked what I saw in Zeta. This was a good setup day trading wise. So let's look at this M5 chart. So here's the market on the 10th. We get a gap up, dip, rally higher, and then we're kind of chopping back around. And I'm watching for this pattern because when we get this early poke and it's kind of a weak move, sellers will try to challenge it. And I'm watching if this move can poke below the low of the day. If we start to find support above the low of the day and we start to get above VWAP over here, that's not a bad place to take some longs. Versus if we actually broke through the low of the day, then I knew that I have a chance to favor the short side and we could fill in some of that gap. So that's really what I was watching for. And that's the pattern that we got. So in this move down, I'm looking for relatively strong stocks. Now Zeta came down a little bit over here at 10, 11 o'clock. And here's the market 11. So it does dip down with the market, which is fine. And then it starts to find support and rally up over here. So compresses above VWAP and digest some of these gains. I also really like this compression breakout and this move higher. This is a really nice move. And it was strong while the market was dipping lower, and it was very strong while the market was moving higher. So this first section relative to the market was looking really, really nice. Now on this breakout here, we got a nice bar on pretty good volume. This is kind of a weird bar. That's, I don't know, strange. Sometimes you have these interesting M5 volume spikes, but what matters is the net movement and the result of that bar. But we got a nice high volume breakout here above this compression, and that's when I took the trade at 22.37. So right over here. Oh, sorry, I did not. I took this right over here. This is when I took the trade. 22.37. I got filled, yeah, somewhere right here. It's a choppy stock, so I figured I didn't have to chase at this high over here. I could probably get a fill maybe halfway of this candle. So I took long day trade, 300 shares, 22.37. And my plan was if SPY holds the low of the day and this stock holds VWAP, I will continue to ride the trade. Now, if either one of these breaks, then I'm going to be out of the trade. So I sized for a max loss that would close convincingly below VWAP, maybe something like 22, something like that. So I went long 300 shares at 22.37, which I mentioned. Now we got this test, and then we got a nice bullish engulf higher, which I really liked, and then we had some follow through. So I added 150 shares at 22.49. So my average was now 22.41 at 450 shares, and I wanted to see some continued follow through, or else I was going to scratch out of the trade. So stock kind of meandering over here and not really doing a whole lot. 1255 to 120. And where is the market? Sorry, lost my bearings here. Here's the market, 1255 to 120. We're getting a move. This move higher is not super strong, and Zeta should have rallied a little bit stronger. I didn't mind this extra little test if we got some more follow through from this, but we keep getting check, 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 check. This is kind of a weak move, and we're not recovering this leg lower as fast as I would have wanted to. So at 125, so at the close of this candle right here is where I scratch out of the trade at 22.39. So I took a 2-cent loss, or just a scratch on an ad, which I was fine with. I figured I can re-enter if I need to, and I can find better stocks. Ends up being a pretty good move. We had one more little pop here that I could have scratched out at, but after that point, flush out, and I would have had to take a big loss. So happy with the play. I think it was a good pick. I liked my setup. I liked my entry. I liked my ad. I think the ad maybe could have been here, something like 22, the close of this candle, like 22.43. So ad could have been slightly better, and I maybe would have made like 2 cents instead of losing 2 cents. But that's it. That's the only little optimization I can see here. Outside of that, I liked my scratch. Ended up being the right choice. And I felt that I read the signs carefully, and I exited when I didn't have the confirmation that I need. And I gave this trade about an hour to perform. So it didn't really perform, especially when I got the market right. on this leg higher, and that was the clue for me to get out. So that was my only trade on 210. The next trade I took was SPY on 211. So I took SPY short at 12.35. Where was this? Oh, I'm sorry. I didn't go SPY short. I went SPY long at 12.35. I took it right here. We had a gap down from CPI, and we had this nice move up higher. And we got this flush lower, and I was looking for a higher low double bottom, and kind of the same pattern as what we saw yesterday, that we get this higher low, this would hold, and then we'd start to rally up higher. So we got this nice strong move through VWAP, and I figured, okay, well, this is a choppy day. It's probably going to retest VWAP, so why don't I just get in at VWAP at 604? And if it takes off without me, that's fine. But in all likelihood, it's probably going to retest it. We're probably going to get a better entry. And if I have to scratch out of the trade, then I take a smaller loss. So it's a much better price and gives you much better risk reward. So I get my fill over here at 604, and I'm taking a little bit of heat, but this move is pretty weak. So as long as this pivot low holds, I'm good to stay in the trade. I'm good to giving it some time because I feel like we're going to test the high of the day. I just entered a little bit earlier, especially because the selling pressure was a little bit heavy. So looking back, it was probably likely that we'd have another little check rather than just a sharp V reversal. So now we're starting to get a move, and then on this pop higher, I have my target at 605. So I exit at 605, and I take $1 on that trade. So I think I just sized that for one share, to be honest. Yeah, I took a one share day trade long. But in terms of confidence and plan, I felt like I was one step ahead here, and I was trading with the market. So to be able to take $1 on a day like this is a pretty nice win. Next trade I took was also on 211, and that was AES. Let's pull this up. So here's a setup on the D1. Pretty bearish chart, steady grinder, had broken out of compression, so very nice setup all in all. Now I'm going to go back to this day right over here. So market, again, gap down and rallied up higher. AES, test. And then if you kind of get in, honestly, probably somewhere here. This is a pretty nice entry point on the stock, 1145. And let me see what's going on at 1145. Yeah, right here. Market's stalling, and this stock is leaking lower. So this is a pretty nice entry point on the stock. And we get a nice leg lower, a little bullish candle here if you want to take gains on this leg. And then we don't get a rally. Instead, we get a huge flush lower right to about 10.05. So I see this move, and I'm like, all right, this is a pretty strong move. And now we're kind of compressing over here. And this stock has not been rallying with the market. So this is setting up very nicely. I just need a break of that low of the day. And then I get the break of the low of the day right here. So I'm thinking this is looking pretty damn nice right now. Super nice, right? Super strong trend, no bounce, breakdown, relatively weak, heavy volume, picture perfect. So I day trade short 500 shares at 10.01. So as soon as I enter the trade, right, where's that breakdown? So I took this breakdown at 145. Here's the market at 145. So very good market entry, very good stock entry. Everything about this setup is great. However, as soon as I entered the trade, I realized that $10 is very likely psychological support on the stock. And there's also probably a lot of option OI over here. And this move was probably a kind of a gamma squeeze back down to that $10 level. I'm sure they have 1050 calls too, but once it kind of crossed, this 1025 threshold halfway through, we got some squeeze out over here, super heavy volume, down to 10.05. And I was like, if there's psychological support at $10, I don't think I want to be in the stock. So we got this long green candle, super heavy volume, which I did not like whatsoever. And then I just scratched at 10:04. So I took a 3-cent loss on this guy. And maybe it would go on, maybe it didn't. But at this point, figured I would not really try to worry about it. And I made a good move day trade wise. Swing trade wise, I actually had a chance to break through this level, which I got through eventually on Friday, but didn't really need to hold through that, to be honest. And I liked how I just had a quick nimble exit, take a scratch, move on, and live to fight another day. So this is a good example of how you should know important D1 levels, because that is where price action can be altered. And even if you, like on a this is a really, if you look at the setup here, this is a super textbook day trade setup, especially for the end of the day. It's a pretty strong move, no bounce here, a compression. This is everything you'd want in a stock, but that D1 level completely nullified all of that. So very important you have that on your charts while you day trade. That's why it's so important to check the D1 charts and make sure you have room. There's no SMAs, there's no horizontal trend lines, there's no high, there's no other trend lines, high and low, minus and plus trend lines. Gaps, AVWAPs, if you use AVWAPs, and so on. So last trade I took on the 11th was Tesla. And I day traded this after I also took gains on my PDS. So there was a daily chart. You've already seen that from the PDS. So I took gains in the PDS, but Tesla still looked pretty good. I needed to see if it would clear that the 100 SMA again, which was over here at 335. So it was over here versus being over here. So here was the 100, and we poked through, and we're kind of compressing below it, digesting some of the gains, and then we get this long red candle here at 110. Now at 110, let's see, at 110, the market to me was actually slightly bullish because we were kind of moving a little bit higher, poking above VWAP, potentially making a higher low over here. And I thought, well, we're right at the SMA, so if this market starts to move up and Tesla rips up here, I'm going to be in a world of hurt. So market is not really moving up here. I figured, okay, well, Tesla shorts looks pretty good. Market is flat. Tesla is continuing lower. So this is looking like a pretty nice entry point. And then market rallies up for the next 4 bars. Tesla also rallies up. And so I entered the trade. It immediately goes against me. But I'm leading on this 100 SMA as support at 335. So as long as that support holds, I'm good to stay in the trade. So we reach it just shy here. And then we get this long red candle at the 100 SMA. And over here is when I add to the trade. So my add here was perfect. My initial entry, not amazing, I would say. It was not bad. But I took gains on my SPY position, and then I knew that at the high of the day, it was likely that we would come back and test the bottom of the range. So Tesla got it over here, chopped around, test, and then we're at the low of the day. And at this point, I'm thinking, okay, I mean, I could take gains here, which would not be a bad win, but I think that this stock has potential to even break down below, and on a breakdown, I'll probably take my gains. So we got the breakdown. This is looking good. And then we get the next candle here, which has a bit of a tail, higher volume than this candle, which tells me that there's some buyers coming in on this move. $310, and where is $310 right here? So we're holding some of this candle. Here's the market at $310, and I figured that good time to call it a day. I don't have to push this too hard, especially when I'm close to the 100 SMA. We could have another snapback that can tend to happen later in the day. So I took the gains on Tesla right here at 327.50, and that was a pretty nice win. And it had a little more follow through in this guy before having a little pop at the end of the day that would have taken me above my price. So nice little day trade on Tesla, a bit of a BOGO in terms of the opportunity on this stock on the 11th, but a nice win. All right, on the 12th, I had a couple of trades. I had 4 trades. So let's first start with the SPY trades. So first SPY trade on the 12th, I was short SPY right over here at 11.08. I took it at 601.55, leading on this high of the day, and I figured that we would get a move to VWAP. So I took it short somewhere right over here and just wanted a quick buck, and I got that quick buck on this candle, 601.55. Got my profit, and I'm out of the trade, and now I'm looking to the long side. So I figured at this point, we're probably going to bounce. I don't know how strong we're going to bounce off of VWAP, but we get a pretty nice bounce, and then this move starts to meander. And then I actually went short, I believe, right here, again on SPY at 603.21, 603.23. I like this. To me, it was a marginal new high. It was kind of pitter-pattering. I felt we would get another little drop, maybe down to here, like 104, 601.50 or something, and then we move higher. But again, this is a strong move. It's going to take probably not the first drop, but the second drop for it to reverse. If it's a weak move, you can probably get profits on that first drop. A stronger move, look at this, marginal new high, and then here is kind of where you want to get in on the trade. Probably at 603.70. That's a slightly better entry. And we get a little bit of follow through. And now I'm really just looking for this stock to have a flush, maybe down to VWAP or even just above VWAP somewhere here, like 601. A couple of 1 or 2 red candles for me to take gains into. We get this, and we have a test right here that pokes below the open of this candle, but most of this candle ends up being preserved for the majority of this move. So this move lower is super weak compared to this move over here. So we have a stronger move up and pitter patters around, and then we have a weaker move lower. So at this point, all signs are on caution, and I'm thinking, well, I need this trend line to hold, and I don't want to see a close above the 8 EMA. If this starts to break out to the upside, I'm going to be toast. There's also this upward sloping trend line for the day. So I'm also cautious about that. So we get a little bit of a poke through, and then we start to inch up higher. So over here at 603.41, I take a scratch on SPY, like a, what is this loss? 18 cents? Very tiny loss on SPY. And this is also a small size. I took this short 10 shares. And then this short was 5 shares, so still trading pretty small size on SPY, but I wasn't as confident in this short as it was on this short, which is why I took the smaller size, and it ended up paying out pretty well. So those are my 2 trades on SPY for that day. The other 2 trades I took was a short on Target. Let's open up this guy. So here was the D1 chart on Target, big breakdown through a VWAP, there's some horizontal levels through this upward sloping trend line. Looking pretty good over here, and there's also some horizontal support at this level as well. Let's look at that M5 chart. So here's the M5 chart on Target, and I went short right here at 11 o'clock. I went short at 127.63. I like this move down. We got a gap down. It was a little bit choppy. We had a bounce over here to test this D1 support that had now become resistance. We had a buy signal, but I wasn't too worried about that. I like this setup on a intraday basis. If we look at the market at 11, here's the market at 11. So I had a great market entry and a great stock entry. So stock is moving lower. Market is also moving lower. And it's getting some relative strength, but price action-wise, this looks pretty good. The volume is nice. I want to see it start to clear this level. And I'm okay if it takes maybe another little bounce that's a higher low and then comes back down. That tells me that I that the downtrend is still intact, and it might take maybe 1 or 2 or even 3 tries to break through, but we could get a late day flush in the day. So we get this green candle here. So I don't love that because I'm like, well, maybe it's a higher low. SPY is also finding some support at VWAP at 11.25, but trend is still up. However, this move has been pretty nice, and I feel that, okay, well, we're making some higher lows, but I can probably withstand another cycle up and another cycle down on this guy and potentially take profits. So I'm okay with holding it right now. So market has a pretty decent rally, and this has a pretty decent rally, but it's still making a higher low. That's really what I'm keying off of. We get this higher low at 11.55. All things are looking good. And then we get a breakout over here with a little bit of follow through. So now I'm thinking, well, we don't have any higher lows anymore. We've actually had a higher high on this stock. Now, market's still been moving higher. It's still preserving its relative weakness. But on an intraday basis, I'm a lot less likely to think that we're going to get back to the low of the day. In fact, I think we may not even get back over here, but there's a chance we could challenge it. So got to see what's going on here. Maybe this is a marginal new high as well. That's my best bet. So now SPY is starting to meander here. And target compresses, breaks down over here. I like this breakdown. We get a pop from VWAP, which is expected. Retraces a little bit more than I would have liked, but then we get a flush down pretty quickly, so we're back on track. And here is when I add to the short at 126.64. So essentially pretty much my same price. I add to the trade, and now I'm looking for a couple things. We have this upward sloping trend line on the M5 that's broken to the upside. We have a nice key bar on decent volume. We have rejected this high once again, this D1 support. We have an exit signal, and we have some room to low the day. So looking for boom, 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 boom. Some nice steady red candles over here. Here's 140, and here is the market at 140, right? So it's looking good over here. So now we get a bullish engulf, which I don't like, but I'm not going to panic immediately. And then we're back on track over here. And now I'm evaluating this move lower, and I see that test up, test up, test up. There's buyers coming in and scooping in this bid, and it's not super strong. I see this high volume doji now at 2 o'clock. Not a huge fan of that, but not something to panic about. It's just part of the trend. And again, I'm waiting for a flush in the market. Target, if you look at this real relative strength, after pretty much as soon as I entered, it has been relatively pretty flat for the day. It's been going up, going down, going up, going down. So the intraday price action has been pretty flat after this initial move. Part of that was probably due to the nature of the drop. And another part of that was just because they had a market tailwind. Maybe there were some buyers by the support, scooping up some of these shares, but a lot more green than red, which is not something that I like. So now the market is starting to climb up a little bit higher, and target is flatlining. So it's flatlining from 2 to 225. The market from 2 to 225, also flatlining here. And now here is where I decide to scratch the trade. And I think I scratch it. Yeah, scratch it pretty much right here on the close of this candle at 230. Market is moving higher. Target is flat, but it's pretty 50-50 to me. This move down has not been strong. It's been mixed. The market trend is up. This move lower on the market was weaker than it should be. This move lower on target was weaker than it should be. It doesn't feel like a 75 or 80% win rate trade anymore. It feels like a 50-50 trade. And that was the main reason that I decided to close it and scratch out of the trade. If it broke lower, great. If it didn't break lower, would have done a Houdini. But being in this situation, I think I would have made this decision again, and I think it's the right decision. And ended up working out pretty well. There was really not much. I mean, how much more could I grab on this, right? Maybe like if I managed to snipe the low at 12 over here at 127.47, I don't know, 10 cents, 13 cents, it's just not worth it. The risk reward is totally skewed, and the upside is much worse than the downside. And when you're playing 50-50, that's going to be a negative EV play. So that was Target. The last trade that I took on the 12th, was Z. By the way, I hope that Target setup was helpful. I put that in the one option chat. I saw a couple of question marks, so if any of those people are watching this video, I do hope that explains my thinking. That I got the ad, I didn't get the move I wanted on the market or the stock, and my odds were no longer in my favor. Oh, let me go back to Z before I zoom onto this D1 chart. So this is a setup I've talked about a couple times on my trade reviews. This is called a gap fill reversal. So what I'm looking for is a stock, usually on material news, that has made a massive move up or down. So this made a massive move down. And typically, big gaps down tend to be more reliable than big gaps up. But I'm looking for a massive move down on insane R volume. Right? Look at this volume on... Jesus. Volume is 15,000. The average volume is 2.5. So this is like an R vol of 6 for the day. Super high R vol. So this is the first thing I'm doing. And then I'm looking for a stock that has super strong, steady intraday price action that we are day trading against the direction of the gap and a day trade only. So I don't post in the chat because it's a more pro play. I feel like I've seen Pete kind of play something like this before. As long as the stock has volume and good price action, he can pretty much trade anything. But I don't post it because I feel like it could cause some confusion in the one option chat. And I'm still sort of refining this setup. And I don't want to post anything that is not guaranteed to work. So let's zoom in on this M5 chart on Z. So big gap down, obviously from earnings. Now, I set alerts early on the day on this stock, knowing the fact that I come in, it's somewhere over here, and I'm like, all right, well, if Z can break through the high of the day, we have a nice chance of moving up higher. Couple things I'm watching for on Z. So we have the 50, obviously, and we also have we have two SMAs here. Back to the D1. So we had, and let me delete these lines because they're cluttering the chart here. When I handed here, we had both the AVWAP E from the prior earnings as well as the election gap, which looked like it was somewhere over here. So here's the election gap on Z. So both of those were in the way before we got to the 50, which did make me hesitate a little bit on that trade. But that's some important context. And I'll point out where they came into play. But here was that breakout on Z. So we're watching it, and then it had a nice move right over here at 11. And literally 11 is the best entry. If we look at the market at 11, market is actually about to go down, but I know this setup can really ignore the market because there's so much R vol here that as long as this market move isn't super strong with heavy volume, Z is pretty much just going to ignore it. So I get in over here. I get in at 11.10 at 76.73. I took day trade long 10 shares. Best entry is at the close of this candle at 76.61. So pretty good entry in terms of the price. Now Z continues up higher, which I like. 11.15, 11.20. You can see the market is moving down. It withstood some of those stronger candles. And then now the market's starting to rally up higher at 11.55. And Z is not able to advance. And here is where we hit that first AVWAP. I believe it's the election AVWAP that's coming into play. So I'm seeing this and I'm thinking, well, you know, this is a pretty strong move in the market. And we've seen two-sided price action today. So what's the chance that if we get a leg lower and Z's not able to break through, you know, I could be kind of eating some crow. So I took gains at 11.45 actually because it wasn't even rallying with the market on this candle here. So I took gains over here. Now, the move ended up being stronger than I anticipated. Z also started to lose its relative weakness as it's digesting some of those gains at the AVWAP. But later on at 12:45, stock starts to, we get this little test here, move up higher. This is a decent entry point over here, and we could ride that up to the 50 SMA for a nice little win. And that's where you take gains. It shifted a little bit, but that's where you'd want to take gains. So my entry was pretty good. I think my exit was justifiable. I probably could have held it a little bit more. But to be honest, I thought that we have a decent chance of getting a higher low here. I thought we'd get a higher low, and I predicted wrong. We ended up getting a new high of the day. And the reason for that was because buyers are in control this whole time, and we're making higher highs. So there's a higher chance of making a higher high than to reverse and make a higher low, especially because we eclipsed this move pretty quickly. Medium-sized candles, decent volume, little overlap. So I could try to stick with it. That's sort of the theme in this. And look, would it have got me that much more profit? No. But this is also a stronger move, and it's going to be a little bit tougher to reverse. So knowing I have some market tailwind, I could give it a little bit more leeway over here to try to break through. And now when it starts to lose its relative strength, I could squeeze it out closer to maybe, 77.90 versus 77.50. So I had a little bit more to push on that guy. Had a test and then had a breakout. So it's tough to kind of stick through it with these AVWAPs. I didn't know what was going to happen, but when you have really, really high R volume and a decent trend, this is a pretty nice trend that's just rallying higher ever since this initial red candle engulfed it pretty quickly. When I have something like that, it's more likely for it to break through technical resistance. It's not guaranteed, obviously. You can see that it broke through the 100, the 50, and it's going to test it after it's made a pretty big move, but there's a higher probability. All right, let's move on to the 13th. Now, on the 13th, I only took one trade, and that was Apple. So we had gap up, a little bit of follow through, and then we compressed here for a little bit, started to pull back down. We found some support at VWAP. This move was pretty weak, and I felt that we had a good chance of pushing up a little bit higher. So Apple on the 13th, we found some support. Let me go to the D1 chart quickly. Oh, forgot to draw in this, probably this trend line here. Deleting some of this stuff over here. Okay, so here is a setup on Apple. A bit of a choppy stock, but it had found some nice relative strength the past couple of days, and it had rallied through the 50 SMA on some nice volume and some pretty decent price action. So pretty decent price action. We got a nice long volume candle here. And then sellers took a bite out of this, came back and tested the 50, which again has moved. The 50 was actually, it's more over here at around 240 versus where it's showing right now at 240.50. So on Apple, my entry was right over here at 240.93. I went day trade long 25 shares, and my plan was to maybe just take a buck on the stock. We had a trend. I entered on a stock that market was moving down. Apple, quick test, but it was holding the gains. It was managed to rally. It was managed to rally up above the 50 SMA and hold that on relative strength, and some volume was coming in on this nice little pop. So I entered right over here. Here's the market setup. Here's the stock setup. Market ended up pulling back, and we had this long red candle, which was my poke through view app. And I was saying, all right, what the hell is happening over here? There was a Trump conference. It's talking about tariffs. But if we look at Apple, absolute beauty, just handling this volatility like a champ. Red bar, test, candle up, test, bullish engulfing candle over here. So we're withstanding all of this tariff news. And we get another test. So as long as this is holding, and I mean, look, this is matching my key bar. Here's my stop closer to the 50 SMA over here, which we never really quite get back, and we're still kind of preserving this upward trend line. Market's moving down. Apple is flat. Beautiful relative strength. And then we finally get the release on the market at 155. So this is a very nice looking setup on Apple. I could have added over here, but I wanted to clear the high of the day. I felt like I didn't have a good ad. I'd rather, because if I can add, somewhere like over here, then if it hits the high of the day and then rejects, I have a chance to escape with the scratch, right? But if I add, and if I kind of front run the high of the day and it rejects, then I'm down. If it breaks through, then I have a great price. So I'd rather get in over here where I have some room to this minor piece of resistance, and then I can evaluate the price action without being in the red. So Apple gets the breakout. However, this is a pretty wimpy move at 220, but the market has a really solid move at 220. So in Apple, I took gains at the close of this candle here, actually at 241.73. So I took 80 cents on this, which was a decent move. I was looking for $1, which I could have gotten on this if I had a hard target, but I was just looking at the candles here. And I exited probably a little bit too prematurely. So I exited here. And again, I made the same mistake the other day where on a strong move, it's not going to immediately reverse. And I kind of knew that, but my thinking was, okay, well, if this starts to stall and Apple's not really strong, Apple's going to start to crumble down lower. What I had on my side was time. This move was still moving up, and it's still going to try to bring up Apple over here. Now, I could have exited maybe at the double top, and then we get a pop-up over here at 250. Oh, what have I done? Yeah, here's the pop-up at 250, which matches up the market. So not a bad place to take gains if you want, but the market still looks pretty good. And then market stalls a little bit, and then Apple, nice 3 candles. And we're starting to pull back over here, and it's still looking kind of bullish, so you could stick with it. But when we get this red doji, and then Apple sells off, then that's when you probably have to get out of the trade. And if you look at this close, pretty much right where I exited. So my thinking was actually leave that much meat on the bone in terms of when I exited. I'm not too mad about that. I probably could have given it a little bit more time. But, it is what it is. Apple wasn't as weak. Took a small gain and went about my day. It's a bit of a tricky one because when the market is pretty strong, a lot of stocks will look relatively weak. But Apple is because it's a mega cap stock and it makes such a big percentage, it is going to follow the market a little bit more. And when it doesn't, I just feel like it's a little more susceptible to market weakness and mirror that a little bit better than if I was trading something like, Netflix or Carvana or something that is a smaller percentage of the S&P 500. Okay. Last day, 214. I took 4 trades on 214. One of them was Hood, which I already talked about, so I'm not going to talk about that again. Let's go. MRK was my best trade, so we'll save that for last to end the video. I'm going to talk about Carvana first. So Carvana, D1 chart. Yeah, it was breaking out of compression. And super nice recovery after this V-shape. Big drop over here. V-shape bottom up over here, nice and high. There's probably a decent long over here if you felt so compelled. So we had a nice move here, and then we kind of digest the entire move, and we preserve the open and the low of this candle on that move. So test. And I set an alert at the high of the day And if we broke through that high of the day, I would enter. So we broke through on this nice long candle. It's actually a little bit longer than I would have liked. I would have preferred it broke like somewhere here at 281, and I would have gotten a much nicer price. But broke over here, so I decided that I would take the long, and it would probably hold. It is a choppy stock. It ended up retracing a little bit. But so I took it right over here at about 281.15. Went long 6 shares. They're pretty small. Max loss of $30. Willing to take a move that, if it takes all the way down through VWAP, then I'm out of the trade. Stock goes over here, pops up, and it's kind of a weird price action, I would say here. So we get this move down. We retrace pretty much all of this move to retest that breakout immediately, which is fine. I'm not super worried about that. And then we get this massive pop up higher that leaves a big tail. So sellers take a bite out of this. And at this section, I kind of don't know what's going to happen with the stock. Like, it retraced a little bit longer than I would have think. Maybe it's in a bullish channel. And after this move up higher, it made let me see the move yesterday. It didn't make a crazy move yesterday. But it's just kind of weird. I didn't really know what to expect after this. Maybe this was a double top and we're going to make a red candle flushing down. Maybe we're going to inch up higher. I don't really know. It's kind of janky. So I decided to take a small win at 22.52. And my plan here was to take maybe like a $2 to $4 move in this guy, which eventually it ended up happening. It needed one more test, and then we started to rally up, and we got some relative strength maybe over here. But yeah, this candle just really threw me off. It was just pretty weird, in my opinion. And I didn't really know what to do. So it's fine. Sometimes you miss out on a winner, but I'm not beating myself too up about it because it didn't feel as 75-25 or 80-20 in terms of probability, like I mentioned with the target trade. At this point, it kind of felt more 50-50 at 1 o'clock. And the market at 1 over here, it was also mildly bearish. It had tested VWAP. So I was like, well, if I'm a little bearish on the market, and I think this has a chance to roll over and maybe start to accelerate, I was looking for potentially like a late day bearish trend day if it starts to accelerate. I didn't know if that would happen, but had a potential to happen. Didn't want to be holding it around. I feel like I could always get out, evaluate from the sidelines. I gave this about an hour to perform and didn't do much, so scratched out of that trade. Okay. Next trade I took INFA. This is another gap fill reversal setup. This is a beautiful setup on this guy. So massive drop down from earnings. Look at this R-vol of 22. Insane. Volatility 700%. So this is a stock that is on my radar, and I'm setting alerts. So over here, we get this early move in the day into the gap. Coming back, we're having relative strength. So set an alert at the high of the day. And just keeping an eye on this guy throughout the day. Has another test at VWAP. And kind of breaks through this trend line over here. So it's looking pretty good over here at 12:30. Market at 12:30 ends up actually putting in almost the low of the day here. So it's gaining some relative strength to the market. And when we break out of this candle right here at 1790, that is when I take the long. And I knew that, look, this stock is not going to care about the market whatsoever. Look, this setup, super orderly price action. We've absorbed the gains here. We've broken through the high of the day. At a couple of tests, we've held VWAP. We're making higher lows, so it's trending up for the day. We don't really have any sort of TA in the way that I need to worry about, and the market's pretty dead. So even if the market comes down, I will have a chance to scratch out of this trade. So it's looking pretty good. Now it just ends up riding higher and higher and higher and higher. If I wasn't too busy managing MRK, I would have been adding to this trade a whole bunch. So we're over here now, and we get a couple of candles here moving up higher, and then I see kind of a couple of tiny bodied candles over here. So I'm thinking, all right, well, this has made a pretty nice move. I don't know if it's going to move up higher, but I might as well lock in some gains. It's moved up $1 on an $18 stock. So it is just chewing away here. That's like a 6% move or something like that. So I see this red candle. We start to pull back here, and I'm thinking, all right, well, it's probably a good chance to lock in some gains. So I exited at 215, or the open at 215 at 18 at 1878 for some nice gains. Now, stock quickly gets back on track, and this would probably be another nice little entry point if I wanted to get into it. I stick with the trade, but just look at this organized action over here. Test, 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 test. I honestly could have just stuck with the trade longer. And let me see what happened at the market at 210. Yeah, market at 210, I was thinking, all right, well, we're at the all-time high. We could be double topping here, and we could start moving lower. Very low volume day, but was a little biased on the market. This stock did not care. And yeah, I mean, when I saw this candle here, you could probably even get out over here if you wanted to. Long red, bit of a bearish engulf again after this nice candle, tiny bodied candles over here, and then red candle flush. We hold that 8 EMA and we inch up higher. So really, really nice price action on this guy. And had a little bit more meat in the bone. I like the trade overall. I think is one that I could have added to a little bit more. But this is a great trade and happy with the results. Okay, MRK. Let's take a look at this D1 chart. Pretty bearish, steady selling, test, gap down, gap down, test, smack, gap down, test, smack, pause, test, smack, bearish trend day, and then we get a nice sell-off over here. Looks like a potential selling climax on the D1. So we open over here, market moves up over higher, MRK is moving down lower and lower and lower. So this is some pretty organized price action. Not too much retracement over here on steady volume. Then we get this boom, 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 boom. We get this move up to VWAP. And then we get a flush lower right here. So on this candle, I get this and enter a little bit late. The ideal entry is something like 83.62. I entered at 83.53. Yeah, so went day trade short 60 shares at 83.53. So I got a pretty decent entry. It was right below this open of this key bar. So, I mean, it's still a good entry point. Not too mad about that. And then we get a couple of tests. Stock is inching lower, poke, 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 poke. And then we get this breakdown over here. I see this little test, come back, test the low, lower high, and then breakdown at 80, right over here at 12.05. So I added another 60 shares at 83.32 when we broke over here. And the stock was gaining relative weakness at 12.05. And it did not respond too much with the market, which I also liked this market move down over here. I liked how in the day we got this test higher, lower high, and we actually poked through the low of the day, which is a key part for me. We poked through here, which is a minor clue, but we needed to see a higher low, and that got me a little bit more bearish for the next leg. We couldn't get above VWAP, and then we made a new low of the day, and we started to inch lower, which is a nice place to ride some of those shorts. So I like the entry point over here, and then we had a nice approach to this low of the day, and we cracked through it, test a little bit here, and I'm watching if this is going to, again, move up against me or if it's going to sink lower. So it starts to sink lower, then to make a final add at 82.93 when it tests the low of the day, compression break, and then compresses and then has a break of the compression to the downside, add another 60 shares. So my average now is 83.28, and I'm on a 3x position. So we get another test of this high of the day, test, test, test. And honestly here, my heart's beating a little bit because, you know, I'm fine with having like a 1x or 2x size. I don't usually have a lot of scenarios where I add to a 3x size. So there was a lot of voices saying, okay, I should take gains. You made a really nice move, blah, 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 blah. And I think of a Pete article that he was talking about where, when you have a really nice trade like that, you got to keep adding and adding and just keep evaluating signs of the technical signs here, right? Is the stock giving me any reason to actually get out of the trade, or is it just my fear of not wanting to give up the profits I already have? And then we leak lower. And honestly, here is I probably could have added again, but 3x, I was already getting a little bit inside my head, so I didn't want to kind of push it. I think maybe in the future, this is the only critique I have of that trade. I could have added here again and written down the trade. at 125. Market was also, if you look at 125 here, yeah, it was also not really doing a whole lot. So it was a nice place to add. And then powerful divergence when the market's moving up and this stock is moving lower. Now we get a pop here, and this is why you shouldn't react on a single candle that hasn't closed yet, because this starts as a long green candle and then you might start to get worried. A lot of volume coming in, and then it ends as a bearish hammer. So I was a little nervous on this candle, but again, I'm telling myself, gotta wait for it to close. If I take the L, I take the L here. You know, if it rips up against me and I take the L, that's fine. But I've made good decisions here. Add or enter, add. Maybe should have added. But I've stuck with a great stock this entire time. And I'm really just watching for this to have a selling climax or some sort of compression. Market's near the high, and now at this high, I'm saying, okay, well, market has a chance to drop and give a little bit of extra tailwind to MRK. And then MRK is looking good, and then bam, at 215, we get this nice long red candle. And market is actually poised to move lower here, and it does move lower a little bit. And that gives us a little bit of extra fuel, but I take gains at 82.38. So this move was a really nice winner that I did not expect. I just kind of marked the chart and I didn't think about it too much, but put it on my radar. But when I entered, I was like, all right, this is just like any other stock. As I entered, it's just a good entry and a good pick, and ended up being a really nice runner. So happy with my entry, and I felt that at this juncture, there was a good chance we could see a bullish hammer or we could get a red candle, and I just don't want to stick around to find that, to be honest. This stock is also diverging, so if that's going to happen, it's going to be a little bit more independent of the market. Massive volume on this candle as well. So we go over here, and then boom, this is what I was worried about. This massive candle here from 40 cents just erases this entire move literally in like 2 bars. Now, if I saw this and if I was still in the trade, I would definitely still take remaining profits because it's still looking good. But after this climax, I mean, you got to be careful because you're getting pretty close to any sort of move up, and I'd really have one foot on the brake here and just ease out of the position. But yeah, that was MRK. That was my most successful day trade, and not even just in terms of the return, but I was thinking to myself, okay, well, like even over here, right? I'm like, even if I end up scratching out of this trade at 83.28, I felt like I made all the right decisions in terms of riding a winning position and adding to a winning position. And I was really in sync with it. So that's kind of what I was the most proud of on this trade, and it just reflected a lot of good decision making. All right. So that are all the trades for this week. Pretty good week overall. Next week, let's see what happens. Shortened week, President's Day weekend. Not a lot of econ news. There is NVIDIA earnings, which is actually in 2 weeks. So next week is probably a little bit going to be pretty dead with the holiday weekend, light volume. And I think the market is going to be waiting for NVIDIA earnings at the end of the month because also no FOMC statement this month. So I think it's going to be a pretty dead week next week. And we'll see how it shapes up. I'm short a SPY PDS. I took the 221 PDS 609 604 for $1.40. I'm 60-40 bearish right now in the market. At the all-time high. So if with that PDS, even if I'm right 33% of the time, I break even. So if I feel that I have a 60% chance of being right, the PDS is an appropriate risk-reward tool for that means. And I probably won't even take a 100% loss in that PDS, which I'm okay with I take. But in all reality, if the market moves up against me, I maybe take like a 70% loss on that. So the risk reward is even better. And I probably only have to be right like 25% of the time for it to be a profitable strategy. So that's the notion with the SPY PDS for next week, looking for any sort of gap down or a gap up bearish reversal. Those are the two scenarios where I can ride out the PDS. If we get a flat open and we start to kind of chew up higher, then I am going to maybe take a small loss and look to get out and re-enter the trade a little bit later. Thanks for watching, everyone. I know this was a longer video, but had a lot of trades this week. A little bit more unexpected, but I had a lot of good wins and a lot of good plays and a lot of good syncing up with the market. Thanks for watching, and I will catch you all next week.